I see hundreds of people joining the room. It's impressive. So hi, everybody. Welcome to this webinar. We will have 1-2 minutes to allow everybody to come in. Once the room is full, we will kick off. We have 5 great panelists today, so I promise I will be speaking much more in this chit chat than in the rest of the hour combined, because I don't want to take any minute off from them. It's a great topic. I don't know if you have read the white paper which supports the webinar today. If you haven't, probably that's something you want to do at some point. There is a chat function within this live, so somewhere on your screen in the bottom you should see the chat button. If you have questions at any time during any of the interventions, please put them in the chat. We will be collecting them, and there will be a Q&A section at the end of the hour. So you have your word to say in that story, use it, and we'll be happy to take the questions. I'm pretty sure we won't be able to take all the questions, but we will take the best ones for sure. I'm French, so for me, the chit chat can last a while. You just raise your hand when you think we should kick off. Wow, impressive numbers, I have to say. I won't give you the full list of panelists right now. You've seen it in the invite, in the communication, but just because they gave me a challenge to introduce them with a haiku. So if I give you the haiku now, it's going to be kind of a spoiler. I want you to stay on your toes for when that really happens in the webinar. But I can spoil you that the opening segment will be kind of a synthesis of the white paper, and you'll have that by no one else than our host today, because I'm someone who's just trampling the carpet, but it's not my home here. So Christopher Gasson will be our first speaker. But you tell me when we really get going.
I think we get going.
Awesome. So then let me do a proper introduction and then off we go. So as I teased, our first speaker for today is Christopher Gasson, who is actually, as I said, our host as well. Thanks for having me moderate that, Christopher, and let me ramble for the first 4 minutes. You'll be presenting the key findings of the white paper. I'll leave you the floor, but as I said, with this introduction haiku, economy's waves, guided by an Oxford hand, inside span runs deep.
Okay. Right. So let me just have a little bit of a recap about this $12.6 trillion challenge that we're talking about. This grew out of this white paper that we put together after talking with David Henderson at XPB about the need for more sort of financial innovation and finance altogether to address this water security theme. And so we started sort of digging into it. And I think that the first thing that I sort of had to come to terms with is the size of this challenge. It is something sort of which is planet shiftingly big in my view. So here we are. So this is when I say planet shiftingly big, I mean, I guess what I really mean is it's going to be something which really has to engage the global financial markets in an extreme way in order to, if this planet is going to sort of survive climate change. And I see it as being the sort of the next big global investment theme over the next decade or so. If you think about these sort of themes which have shaped our financial markets, I mean, first, after Bretton Woods, we saw globalization as being the big theme where the money was sort of flowing, and then after the invention of the World Wide Web, so the whole digital thing took off, and that's obviously still going strongly. And then after the Kyoto Agreement, I think that sort of the energy transition became the big deal. And what I'm saying is water is going to be the next big deal on the same level as those things. And that's really on the basis that water is at the heart of the impact of climate change. And as we sort of pass the 1.5 degree limit, we have to start thinking about how that is going to change our planet and how we need to respond. And so the research that our team sort of looked at is this. We did this analysis of insurance losses related to sort of weather events, and showing, first of all, that these things have been growing very steeply as a result of the extremes of sort of droughts and floods that come with climate change. And so not only that, but the majority of them are related to water. I mean, so within the, if you actually start looking at storm damage, which is obviously the biggest single sort of problem, weather-related cost in insurance terms, you find that the majority of it is actually related to water damage rather than wind damage. So overall, that means that 69% of weather-related events are water-related. And to some extent, that is an understatement of things, in that a lot of the drought, the costs of droughts are not insurance costs. There's costs to the global sort of food supply chain and so forth. And furthermore, when you start looking at solutions, you can see that water is going to be the one thing that is sort of manageable when it comes around to climate change. We can't do much about the wind. You can't do much really about extreme heat. You can live in an air-conditioned building, but on the global scale, you can't really manage temperature. But you can, to some extent, invest to improve your ability to control water, and that's really got to be the key global priority for the planet over the next decade or so. Building that ability to control the extremes of water that we're likely to experience as a result of climate change. And then, trying to put a number on all of that, we sort of looked at the total capital employed within the water sector at the moment, or in water-related infrastructure and technology and management. And we came up with this figure, which I seem to remember was it's 3.8 billion or whatever. And then looking forward about where we need to go, that's where we get to this $12.6 trillion challenge. And that needs to go sort of right across the board. It needs to go into sort of asset ownership for sort of water supply and stormwater management and wastewater treatment and so forth. And it's not going to be enough to sort of close that gap with public finances alone. We're going to need to see more financial innovation to bring capital into that sector. And it's not all going to be on the public balance sheet, as this chart shows. Agricultural water, that's something which it has got, there are some investment opportunities there. It's obviously a huge use of water, but its impact is, in terms of the investable opportunities, they're a little bit more limited. Then, keeping the cost of all this down, we have to look to, solutions and technology investment. David Henderson, I think, can talk to some of those things. Then we've got the corporate water aspect, that we're going to, not only are sort of industrial water users going to need to invest a lot more in the way that they manage water, but investors are going to have to build water into their equity investment strategies much more effectively. And I think that's one of the things that Claire can talk about later. And then we got this sort of impact finance where, you know, we're looking at more you know, SDG 6 developing world water security issues where Paul will be talking about. So that's just giving a sort of overview of the situation. I will close this now, and we will return to the there we are. I'll return to Antoine.
Thanks a lot, Christopher. I think we now have all the base understanding of what's inside the white paper. There's more to it. We'll discuss it. But I thought we could divide the subsequent discussion into 4 chapters. So we will have a first chapter where we look at the why now. What are the forces at play that will trigger the forecasted change that Christopher just showed? Second, how will be this new normal? How will it look like? What's the new paradigm? Third, we'll strive to challenge some of the paper's thesis. So I'm the bad guy here. I will be raising some questions. And finally, we'll have some concluding thoughts and call to action. And then I see that you started raising questions. We will have a Q&A. Before we go into all of that, what I propose you is that I will be presenting our panelists, and then it's just a conversation for the rest of the hour. So first, we have David Henderson, which is the founder of managing partner of XPSB Water Partners. Here's your haiku, Dave. Entrepreneurs stream, scaling heights with water's aid, hockey sticks and deals. Welcome, Dave. Then we have Radhika Fox, who very recently stepped down from her role as Assistant Administrator of the US EPA, previously served as CEO of the US Water Alliance, and just took on the role of Senior Advisor for Xylem. Here's your haiku. From bay to global stage, sorry, let me respect my words. From bay to global stage, Waters advocate ascends, change flow, vision leads. Thanks for being with us today, Radhika. Our next great speaker is Claire Elsdon, the Global Director of Capital Markets at CDP, who I'm glad to introduce with this haiku. London's finance sage, Tanzania's road once called, now Earth's advocate. Glad to have you with us today, Claire. And last but not least, we have Paul O'Connell, the President and CEO of WaterEquity, for whom I wrote the following haiku. Finance for Water's call, from Harvard to global reach, liquidity for all. Super happy to have you with us, Paul. And for me, my name is Antoine Walter. I usually have a podcast called Don't Waste Water. If you're interested in investment topics, look out for Wednesday's release, which is a controversial take on venture capital in water, but that's my shameless plug. Now to the topic of today. I'll start with a question to you, Dave. If I'm right to identify 3 forces at play that will nudge a paradigm shift, what are these 3 forces and how will they trigger the world to move into climate change adaptation?
Thanks, Antoine. Yeah, I guess I'd start off by saying, you know, as an investor, I've learned a key fact, and that is usually industries change from the outside in. And that means they're really driven off of externalities. And I think the big externality here, as Christopher alluded to earlier and yourself, is climate change. And we've hit that 1.5 degrees, which is going to force adaptation. And so there's 3, we believe here at XVV, there's 3 things, this is highlighted in the report, that we think we need to address if we want to have a water secure future. And it really comes down to water availability. So how do we manage too little, too much? By the way, both those challenges are equally challenging. The next one is water process efficiency. So, you know, how do we improve the processes of water-related processes? This includes everything from energy consumption, chemical consumption, CapEx, obviously, you know, people intensity. And then the final one is water quality. We got to ensure, obviously, everything from how do we monitor, ensure the quality of all of our waterways, but also, you know, ensure that we're discharging high-quality water back to the environment.
I guess that's the situation as we want to see it in the future, but that starts with a challenge. And I think that's what you called a broken water cycle, Radhika, if I'm right.
Right.
Well, good morning, everyone. And Antoine, I think you have a poet streak in you as well. I love those haikus. And I just wanted to actually start off by congratulating Christopher and David for a really excellent white paper. I mean, there are so many reports written about water, can't read them all. This one, I think, does a really excellent job of crystallizing the big trends and the big issues in a very accessible way. So I certainly encourage you all to read the white paper. It's excellent. So, nothing is more critical to society, to the successes of our society than the ability to supply water where it's needed, when it's needed, and then really on the flip side, to keep floodwaters at bay, to protect our communities. But if you think about it, all of the ways that we have grown as a society has fundamentally broken the water cycle, right? So what Christopher and David are talking about, my challenge is we've got to figure out how we put that water cycle back together. And that's going to require the kinds of investment that Christopher just talked about and David just talked about. But it's also going to require innovation, returning to understanding that natural cycle and then utilizing innovation to rebuild it. So Antoine, as you mentioned, just until a couple of weeks ago, I served as America's water chief. I was a day one appointee by President Biden. And so over the last 3 years have been really stewarding both the infrastructure investments that we're making in the United States in water infrastructure, as well as major regulations that I think are important market signals that I want to talk about. So really, three forces that are happening here, particularly in the United States market. One is, of course, the bipartisan infrastructure law, $50 billion investment in water infrastructure. But what I will say is we are very much just at the tip of the spear when it comes to the impact of those dollars. There's about 3,000 assistance agreements, so active projects right now that are funded through the bipartisan infrastructure law, but that's only the first year of funding, right? So even though it's a 5-year spend, it's going to be a decade long sort of tailwind in the U.S. market as far as the need for these water projects and all of the things that we need to make those projects successful. And the second thing that's happening here in the United States is that parallel to that $50 billion investment in water itself, the Biden administration is making a significant $500 million investment in building the technical, financial, and managerial capacity of water utilities. So all of those utilities that are, out of compliance don't have necessarily the financial wherewithal to be able to make the investments that they need. We're building that baseline foundation for those underperforming utilities, which we think over time is going to create a virtuous cycle that's going to call for more investment. And then I think the third thing, and we can get into this more as we get into the discussion, is the regulations. We are really at a new era of regulatory drivers in the United States, both for new contaminants like PFAS, as well as strengthening and putting forward more stringent requirements around legacy issues like lead in drinking water. So I think all of those things are going to contribute forces that really propel the kind of investment that Christopher and David lay out in the white paper.
What I'm picking up in what you're saying is that we have to see at the public investment not only as an investment, but also as a call for further investment from different sources. And to that extent, I'd be interested to have both of your opinions, Dave and Radhika, and how that is supposed to happen. Where does the gap close? Where do you bridge these private and public links? And why does it happen now? What are these forces at play which makes it happen now beyond what you just said, which is already a good answer?
Radhika, do you want to go first, or?
You go ahead, David.
Yeah, I think one of the things that we've certainly observed, I'd say over the last 3 to 5 years, is the shrinking between the cause and effect. And I think this is really important for water, and in particular, growth and adaptation of innovation, technologies, and solutions. And the reason I say that is when you talk about water, you always hear, out of sight, out of mind, change was always coming. But, and I think PFAS is a great example of this, is where suddenly now that cause and effect window has really shrank. And I think that's really, really important for adaptation, because we're all humans, and at the end of the day, if you can't match that cause with effect, it becomes very hard to change. So for example, if your city was flooded every 50 years, well, okay, it may not cause a lot of change. If your city is getting flooded every year, that's going to cause a lot of change. And I think that cause and effect impact is happening not just in any one particular place, it's happening around the world. I'd say that's one of the big drivers that at least we're seeing that's changing. The other thing I would like to add, and this might be some good feedback from Claire as well, is that we're seeing unprecedented corporate dollars come into the water sector. So it's not just governments and the amazing work that Radhika did with the $55 billion that's been invested in the U.S. market. It's also, we're seeing corporates for, not for the first time, where this has become a boardroom risk factor, and they're investing in their supply chains, they're investing in their manufacturing processes to obviously address those three key areas of water availability, process efficiency, and water quality management.
David, I love what you said. Oh, sorry. I loved what you said about cause and effect. And sort of what I would add to that is that public expectation has shifted significantly, right? So with PFAS, I mean, there is such a demand from the American public that we do something about it. And I think once you bring that kind of awareness on these challenges to the forefront, you can't put that back, right? So the cause and effect that you said, coupled with the public expectation that we do better and that we invest more, I think is a why now moment.
Dave, you called for unprecedented corporate dollars, and I think that's the perfect seg to you, Claire. You have this $130 trillion asset of financial institutions, which you would like to think more about water security. How difficult of a conversation is that? Are they easy to convince, or is it just, job done, you just have to roll out?
I suspect you know the answer to that question, Antoine. It's very much a conversation that's rolling. And thank you, by the way, also for my haiku. I thought that was incredibly creative, and I completely echo everything Radhika said about the report. It's a really important contribution to the consciousness as to what's going on in this space. So in terms of where we're seeing corporates reporting on water, and also financial institutions reporting on their exposure to water-related risk. For those of you who don't know CDP so well, so we're a global nonprofit, the largest environmental disclosure platform in the world. And last year we saw over 5,000 companies disclosing according to their water risk and opportunities through CDP. We also saw over 300 financial institutions reporting on their exposure to water. So we've got a really good lens into what the state of water reporting looks like. And I think while we've seen a huge growth in those disclosure volumes coming through from companies who are really starting to become very much more activated as to what is going on within their portfolios when it comes to risks around water, making sure they have board level oversight as to water related issues, getting those good governance practices into process, and even thinking in some cases about ways in which they can reduce their water footprints through much better process management, as one example. That's still actually a relatively small slice of the overall pie. So we saw over 20,000 corporate disclosures coming through CDP last year. So what we know is that we're building up a really good head of steam, to forgive the pun, but we've got an awful lot more to do. And I think that this year we're starting to see, certainly from the financial institution backdrop, and I run the team that has relationships with over 740 financial institutions globally. So we're having these conversations daily. There's a lot more awareness coming through now about water-related risk. I think part of that is due to the requirements around TNFD reporting, which is really starting to focus attention from a financial institution standpoint on how do we prepare to be able to make a good disclosure aligned with TNFD. What does that look like? Where are we going to get the data from? They're also thinking about other things like product level labeling around investments and needing to start to think about what those really look like, whether that's to do with SFDR or other requirements. So I'd say there's a mixed picture. We have some maturity. We have some banks issuing water footprint loans, for example, and really trying to work specifically with companies who have significant water footprints to incentivize them to reduce those, and with financial kickers and penalties coming in according to their performance, and that's looked at on an annual basis. But I think overall we've got a lot more to see and to do. It constantly, honestly, shocks me the extent to which, when you talk to companies about where they are with taking stock of water in their portfolios, within their processes, you'll hear about some, with it, we know that our water footprint within our headquarters is X, and so it's not a great concern to us. But they just haven't thought through. No, just take stock a minute. What about downstream? What about it within your supply chains? To what extent are you dependent on water abundance in order to be able to produce the goods that you're expecting to come through those supply chains back into your stores, into your offerings? And to what extent have you stress tested those assumptions for a drought situation, for example? What does that look like? And you can just see the faces drop as they start to compute, okay, that's actually going to become a reality in future, and we haven't taken stock of that, and we need to be resilient within our own operations and in our supply chains. Otherwise, we're not going to have a license to operate, and we'll either literally not be able to sell product, or we will lose our license to operate locally. So that's a major issue for these companies. So I think there's a couple of factors that are swirling around to really create a sense of ambition and urgency around this topic. But suffice to say, we do see a lot more work that still needs to be done.
Just for the muggles, so the layman here in that room, how do you transition them from disclosing and reporting to bring that awareness across? Is it your role as CDP, or is it someone else's job?
So it's a really great point. Disclosure in itself doesn't change anything. It's an activity that is absolutely essential in order for a company to take stock in terms of what does its footprint look like today, and having that ability to evaluate what the baseline is today is a really important part of saying, okay, this is where we are. This feels risky. Where do we need to get to? Let's start to set some targets. Let's start to have some ambition around what good needs to look like, and how do we start to get there? Now, I don't think in the market we have any good sense of what a transition plan looks like for really strong water security necessarily, but we're starting to understand, okay, so a company needs to look at its water intensity, it needs to reduce that, it needs to be thinking much more carefully around its pollution, for example, it needs to be really managing that. And there is no way that we can assume that just because water is abundant, and certainly it is, it's generally salty, and for anyone relying on freshwater abundance, they're going to have to really be taking stock of this much more seriously. I mean, to take an example that was really significant in the news last year around chip manufacturers in Taiwan, there was a significant drought issue out there, and we know that the world's growth is dependent on an abundance of increasingly complex chips, which are thirsty in their production. And actually what that looks like then, those emergency measures that some of those chip manufacturers, TSMC and others, had to bring in order to keep the lights on and to keep producing, were significant. So I think we really need to see some stress testing coming in. Okay, what does our business look like under different scenarios? Where do we need to get towards, and how do we get there? And constantly making sure that through their disclosures, they are actually demonstrating that improvement is starting to come through in their business performance. That's how we get towards a secure future and a fairer future.
There's a piece of the puzzle we haven't addressed yet, which is SDG 6. We've covered the developed world, we've covered a bit of the corporate side of the story. Yet, Paul, with WaterEquity, you've deployed $350 million through micro loans. And that's part of that story of how we put money to good use and to action. Can you tell us that part of the story, how you ended up doing that, which, if I'm right, was not the first part of the investment thesis, and how does that evolve in the coming months and years?
Yeah, absolutely. Thanks very much, Antoine. And it is indeed great to be here and to have a chance to join in the discussion. And I do want to once again reinforce what's said so far about the report that is put out. It's 29 pages of some of the highest signal to noise ratio material out there. It reminds me of one that was also put out, I think, last June on the climate impact of water. Same thing, very, very crisp, succinct and concise, and really gets to the heart of the matter. So I'm glad we're having this discussion. There's no doubt that the impact piece of water and sanitation is crucial. And when we think about the the 700, 800 million people who don't have access to water, and the 3 to 4 billion who don't have access to safe sanitation. We can talk about water and sanitation in the industrial world. It's an almost existential question for us as a civilization when we think about the developing markets and the emerging markets, and what that's going to mean as climate changes and as water scarcity becomes more and more of a problem. And what's interesting to us is, we're an asset manager, and our mission, we're a nonprofit asset manager. Our mission is to get capital flowing into that space, because right now, or traditionally, the market hasn't worked that well. The capital markets haven't worked that well for supplying capital to the space. What's interesting to us is we're seeing the very evolution that is mentioned in this report. We're seeing an increased awareness and consciousness of the importance of getting capital to that segment, and it's coming from the marketplace, so it's almost making our job easier. One of the things that I do like to highlight is that water and sanitation as an asset class has performed incredibly well, and a lot of times we talk about the top line, just financial returns, even leave aside impact for a second. If you look back over the last 18, 20 years, the S&P Global Water Index, or the GWI Water Index, which is, I think, in the appendix of this document, you can see that not only are the returns very good, but the volatility, the risk on it, is less than what you see in the traditional markets. Oftentimes that gets lost. The risk to return ratio is very, very good on water and sanitation. And that's a case we've been making to investors, and that's, that has actually, I think, resonated with them. And the same is even true in private water investments. If you look, for example, at the EDHEC Infrastructure Index of 300 companies this millennium, the typical return on the overall index is outstripped by investments in water and sanitation, in water and sewage. It's a good financial investment. If you start there and then you layer on top the impact, whether you look at it through the SDG 6 lens or the lens of the water basins where you are perhaps operating as a company, or the country political security considerations you might have as a government entity, layer that on top of the financial returns, and all of a sudden it becomes one of the most compelling investment spaces out there. And so I'm very much pleased to see this paper. I think it recognizes what is in fact already happening in the marketplace. We're seeing increasing capital come in. And I do think it's spot on with regard to the next evolution and the exponential growth of the space.
Let me be the devil's advocate here to what you just said. Water is a great investment. I think we would all agree on that. There's a 7-to-1 ratio on each dollar deployed in developed country, which is also taken in the white paper. There's this cost of non-access to water, which was demonstrated by water.org to be at 300 billion per year when the investment is 100. I mean, all the metrics since years show that there is positive value in investing in water. I think CDP, you wrote a report last year about the $2.3 trillion business opportunity in water. I'm keen to believe all those numbers. I'm just wondering, why would we see the beginning of the S-curve right now when we haven't seen it in the past months and years, when all these stars already seem to align?
So maybe I'll just start with a quick comment on that, and then turn it over to the other panelists. I think S-curve is a good way to characterize it. I think we saw the first decade of this millennium, really up through the beginning, probably 2015, we saw a very strong investment climate for water and sanitation. Then coming through the pandemic, we saw a little bit of a slowdown. It became more difficult, obviously, to deploy and to move investments around the world and to do the due diligence that you needed, especially in the markets that we look to serve. And so you did see a little bit of retracement happening. Since then, we've seen the beginnings of a re-acceleration, I think, and it's coming from demand. It's coming from corporations who are working in water basins that are becoming depleted, who are hearing from their consumers that they need to do better. So it makes good business sense for them to do it, even just from that side, let alone the actual production technologies that they're engaged in. And it's coming from a sense that the returns that are available for investment in the space are quite compelling. And so I think, you know, again, S-curve is a good characterization. We came out the gates quite quickly investment-wise this millennium. You'll see it in the returns, let's say, of the GWI Water Index. Then a little bit of a slowdown over the last 5-7 years, and now it's starting to accelerate again.
Any other thoughts from any of the panelists on that one?
I think what Paul said was an excellent analysis. I mean, the thing that I would add to it is really this climate piece, right? Necessity is the mother of invention, we often say, right? And you know, when you have communities all around the planet suffering in very real and personal terms because of the climate crisis, whether it's too much water and the drought that we're certainly facing here in the Western United States, the flooding, these are now just everyday lived experiences that create a demand for the kinds of solutions that are then driving, I think, this investment imperative. So that's the piece that I would add to what Paul said.
Let me go into the nitty-gritty details of the report, and we may discuss further that in the Q&A. I saw some questions from the chat, so I'm going to mix my questions with the one from the chat. There was one saying that private equity is projected to go from 100 billion to 600 billion in 10 years. And I quote, "What's the basis for such crazy fast growth?" What I had noted is also that the water solutions and technology companies will get multiplied by nearly 5 in just 10 years. And corporate investment goes from less than 1 billion to 3.2 trillion in the decade. So trees grow up to the sky, I know that, but where's the sky? So, Christopher.
Okay. So how do I justify this sort of extreme optimism about the situation in terms of water investment? Well, I think going back, you know, it's very much on what Radhika was saying, that our lived experience of water is changing. It used to be that droughts happened, and then they became some day zero events, and now we've crossed the sort of 1.5 degree threshold. Then we're going to find those things becoming just that much more extreme, and similarly on the flood side, the unimaginable things are just happening to us all over the world all of the time now. And this is going to change the way that water, or at least the value of water management is perceived. And I don't, if you think about I don't know, take the biggest sort of company in the water business, Veolia. Its share price was at 65 euros, whatever, 12 years ago. It fell to 12 euros. It's now back up in the 20s. These things do change as perceptions change. And part of what we're trying to do here, publishing this report and getting this data out there, is to engage the financial markets so that they actually see this is an opportunity. And it's not just an opportunity to deploy capital, it's also an opportunity for greater financial creativity. I think that one of the fundamental problem of water from an investor standpoint is that it's heavy. It requires a lot of capital per sort of dollar of revenue. So typically on the infrastructure side, you need to have, if you're running a utility, you're talking about for every sort of $1 of revenue, you've got $7 of capital deployed. And similarly, I mean, as Dave would say on the technology side, it's slow to deploy because the customers are all sort of risk averse and so forth. but this is changing. You know, all the dynamics of these things are changing. Once people start understanding the need to pay for water, then that ratio between the revenue and the capital starts to change. Once people start seeing the imperative of better solutions, then people start making way for more technology. And you know, it doesn't take that much to actually completely reevaluate the sector, but it requires the investors to engage with this global challenge.
What you just said reflects very good with one of the questions in the chat, which I'm taking now because I think it makes sense. The question is, in the report, there is extended analysis on the value at risk from a lack of corporate stewardship. However, there was a glaring gap in that there was virtually no discussion of the current mispricing of water and needed recalibration to reflect scarcity value, underinvestment in aging infrastructure, etc. The underpricing of water leads to overconsumption and undercuts the business case for conservation/reuse and compounds future water insecurity. Economic regulation plays a vital role. How can policymakers and corporate stewards act to calibrate pricing to reflect the true value of water?
And here I'd say, you know, it doesn't really work for a single company or a single country to say, we're going to price water, create a shadow price of water, which is going to disadvantage us in trade. What does work is that happening on a global level. And that's why I'm so interested in the work of the Global Commission on the Economics of Water, where they have the Director General of the World Trade Organization saying that she's looking at ways of building, you know, the value of water into international trade agreements. And I think that's the way that I would expect this sort of thing to be addressed. I think countries individually saying, right, anything that we export will, you know, become more expensive because we're going to add a sort of a virtual water price to it, would be sort of damaging. And as a result, I think it has to be a global coordination. I don't know, Claire, do you have some views on this sort of pricing side of things?
Yeah, it's fascinating. This comes up quite regularly, and it really is so hard to draw comparisons between a carbon price for all the reasons Christopher mentioned. I mean, you know, the value of a litre of water in one particular geography and basin will be very different to the value in another. It's not interchangeable in the same way that carbon arguably is. And so that local element of water is really, really critical to understand. I think bringing it back to the question of sort of how do we activate and accelerate the prioritization of this as an issue in the minds of those who have the power to drive change. I think certainly from where I can speak to this, from the sort of financial institutions perspective and indeed the corporates, I think as increasingly there is a requirement for not just reporting but stress testing portfolios. And I know that Cecil did a really interesting piece with HSBC exploring the impacts of a drought in a particular geography for, I think it was 1 or 2 months, and it was very significant in terms of the implied effect on the credit rating of those securities that they were holding. We know that it has a material business risk. So I think as financial institutions start to chew through what their exposures actually look like and how those could be affected by, you know, various different scenarios relating, for example, to water as one of the most material effects that we can see on a portfolio, I think that's where we start to see this recalibration of, okay, how much risk are we prepared to take? And I think as we start to get a much more informed position on the part of the banks, in the same way that we've seen, though in a much more nuanced way, that we've seen banks starting in some geographies to reassess what the cost of capital should be like for certain companies who either have or have not got a robust net zero target in place, and for whom may or may not have a good transition plan in place. I think over time, we're not quite there yet, but over time, we will start to see this cascade into the cost of capital for companies who are not taking good account and management and stewardship of the water that it sits within their control and influence. So I think we're going to start to see those impacts coming through. And I think from this perspective, again, of the, you know, of supply chains, we are seeing, you know, we have over 380 corporates who use CDP to request disclosure from their supply chains. Around a third of those do request disclosure on the water security elements of their suppliers. So again, we're starting to see a real growth and awareness of needing to understand the resilience of those supply chains, and therefore either incentives can be put in place, either through things like sustainability linked supplier financing solutions, which basically mean that you may get a discount on your financing if you're doing the right thing when it comes to water management, or simply losing the ability to supply to a buyer if you aren't doing the right thing by water completely makes sense. So increasingly for companies, this is going to be really circled back round to, do I still have a sustainable business? And if I don't, I'm going to be losing customers, or it could further increase my cost of capital. And we all know globally how interest rates have really spiraled over the last 2 years. And certainly I felt it on my mortgage. So it does bite at a certain point. These are the things that can crystallize the risk factors for a company and really catalyze that pivoting towards a more sustainable way of working.
You mentioned the incentives. One of the traditional incentives in water usually is regulation. So I wanted to challenge you on that one, but there's a great question in the chat, so I'm going to just steal the wisdom of the chat. It seems to me that the elephant in the room is good public water governance. Without that, any amount of investment is unlikely to succeed and will just be pouring water into a bucket with holes. Improving water governance is not necessarily an investment, which as direct an ROI. How can that elephant in the room be appropriately addressed? I took that one, but there are several questions around regulation and governance. I'm tempted to give you the mic, Radhika, but up to you.
Well, there's a lot to say about governance. I mean, of course, certainly here in the United States, we have a fairly broken, I can use that word now because I'm not in the seat anymore at EPA, but we have a very broken and fragmented governance structure here in the United States. 55,000 drinking water utilities, 18,000 wastewater utilities, and so we're never going to realize the promise of really what's outlined in the white paper if we don't tackle that as well. It is also one of the hardest things to do because of the culture that we have in this sector, the risk-averse nature, I think, odd attachment that people have to their local water utility, which is just a very strange thing, but is true. A couple of things that are underway. So one of the things when we won this $50 billion of funding for water infrastructure, one of the things that we directed in the policy guidance memo that I issued was actually encouraging the use of these dollars to support regionalization, consolidation of water utilities to sort of be a step in tackling that governance. There is a water restructuring systems rule that's also going to be issued later this year that will again encourage states who have primacy here in the United States to encourage some of that. But I also think that there's an aspect of governance that is really about democracy and participation. And so the extent to which we're also more transparent in how water decisions are being made so that people feel connected to them, I think is also a way to get people excited about the governance of water. I mean, one of the challenges that we have here in the United States is many of these water systems, they have boards, they have commissions, and no one understands the power of sitting on those commissions and helping to direct things like rates, where investments are happening. So I think that there's a need really to also reinvigorate the democracy around water systems to sort of tackle the structural governance issue that we face.
I'm just reading the question. I'm trying to synthesize that as well with the findings of the paper. There's something I had noted, which is that in the paper, you show how 78% of the capital used in water today is public, and how in that new normal in 2034, we'll have only 43% of that money which comes from public sources, which means by extension that 57% comes from private sources. And several people here in the chat are raising the question, what does that change? Will we see pink unicorns and technology get adopted much faster? Does it change? Actually, not so much, even less. Actually, I have a question for you, Paul, which you're deploying project money, and to you, Dave, who probably wants those new tech to get adopted a bit faster. Would you see that change have any impact on what you're doing?
Happy to kick off and then pass over to Dave. I mean, I think the answer is yes. I mean, I think there'll always and everywhere be a public component to water supply. if it's centralized. If we're talking about piped systems, water and sanitation systems, because of the economies of scale. Now, all of that said, if we look at, let's say, the cell phone revolution, which bypassed landlines globally, or we look at the payments revolution, which has bypassed traditional banks in Africa, or if we look at, think about energy, localized generation and use of energy versus mega infrastructure centralized projects. I think we're going to see some of that in water too. I think it's mentioned in the report that the cost of desalination, or the energy intensity of desalination, is down to around 2.5 kilowatt hours per cubic meter, and potentially it can go all the way down to 1. That might be the sort of theoretical limit, 1 kilowatt hour per cubic meter. We're already seeing atmospheric water generation technologies that are able to generate water locally for about 40 kilowatts. So not as efficient as a centralized system, but my goodness, how wonderful would it be to have water generated sustainably, cleanly, locally, without the transportation of a centralized public system, without the leaks, without the governance, without all the issues that go with centralization. So I do see an opportunity for creativity and imagination coming from the private sector for water and sanitation.
Can I right away, before you go on, Dave, challenge you on that, Paul, because I've seen the face of Christopher when you were mentioning atmospheric water generation. Nothing against the technology itself, just my line of thought here is, if you don't know much about water, atmospheric water generation is so elegant as private money to invest into something, because you invest money, here comes water. And I think in a very famous editorial, Christopher, you called that an egregious waste of money some years ago. I don't want to reopen that box. I'm just saying there is a component of educating an investment community which maybe doesn't know water that well to the intricacies of water tech.
I will just say a couple of sentences on that. I wholeheartedly agree. It goes back to something that was said earlier on the call, which is that a cubic meter of water in one location is not the same as a cubic meter in another location. If we're thinking about some of the communities that we serve in, base of the economic pyramid, little to no infrastructure, paying an exorbitant amount in terms of their time walking to get water, their healthcare costs because they're drinking dirty water, they don't have the dignity of sanitation. There, I think it's reasonable to think about decentralized solutions. I think more for the world as a whole, though, we do need to still rely on economies of scale and more centralized solutions for the very large populations.
Dave, I'm sorry, I cut you off with my remark. Go on.
No worries. Listen, I think it comes down to a combination of what we really covered here on this webinar. And that is when you take the externalities of climate change and the pressures that creates, and then some of the things Claire talked about, transparency, awareness, right? You combine that with some of the things Paul's talking about in terms of, igniting, imagination, innovation. I think it's all of these things coming together that's changed, or at least gives us conviction that we're going to see some tremendous growth here in all sorts of innovation. And I think this was part of the purpose of the paper when Christopher and I got together to do this. And that is, it's a call to the financial industry. And I think I think part of the growth in all those numbers isn't just unicorns in water. It's, hey, can we innovate around the financial model? Could there be water credits? Could there be water as a service? Could there be different types of ways of finance? I think that's all coming, because again, it comes back to some clear fundamental changes that are happening to our planet through climate change, but then the overall, everything we just talked about. And if you think about it, again, I think it's just unprecedented to see the corporate investor interest combined with regulators and government interest, obviously then backed by the private sector in terms of groups like myself. I think it's the combination of those things, and that's what gives us conviction. So it's not just about one technology or one innovation; it's innovation across the landscape. And listen, I was an internet kid in the 90s when I started my career, and when they first started talking about the web, they would start throwing out some pretty big numbers, right? Well, I think we've superseded all those numbers, because It's that whole idea of let 1,000 flowers bloom, right? So I think you're going to see all sorts of innovation, and that's part of the call to hopefully everybody on this call today. And that is, if you're not part of the water, revolution, join, because we're going to need all the help if we're going to get through this. So that's how we think about it.
I have lots of questions in the chat which go in lots of different directions. So I propose you to take like short answers to those if we don't want to go too much overboard. I'll just cluster all the ones for PFAS together, which is PFAS, PFOS. There were different ways to name it in the chat. Is the next big wave, which we can address by many different things. Regulation, we eliminate them, we separate them. Something which I like to couple it with, there was a question about the water sector is not in the middle of a desert. It's in the middle of the society and other adjacencies and other sectors. So how do we bring all of that together? That's a health topic, but it's also a water topic. That's an air topic, but it's also an industrial topic. How do we bring all those layers together? Sorry for the difficult question.
Shall I answer that, or somebody?
Please.
Well, I mean, I guess that this is the whole thing about water. It is 60% of our bodies, and if it's 60% of our life. You've got to see that it's got all of these things which are overlapping. And the way I sort of see the sort of climate change thing sort of tying in with PFAS and these other sort of seemingly unrelated things is that I feel that the climate change is something that we can't ignore. Now, Radhika's obviously, while at the EPA was, grabbing the sort of PFAS issue with both hands in a way that regulators in other parts of the world are ignoring currently. But you don't need a sort of an activist water boss to grab climate change. It's grabbing you, and the way I see it is that this is going to force the world to think about how do we finance water. A lot of these things currently have no income streams attached to them, particularly flood control, for example. And we need to start thinking, how is it that we can get the solutions, the infrastructure, etc., which are going to provide this water secure world? How are we going to make this, get the money in to do this? We need that kind of sort of financial innovation. As I see it, if we can find the model that addresses climate change in water, then we can find the model that addresses PFAS, because obviously people are going to look at sort of the PFAS thing and say this is just extra cost, and we can't avoid drinking water. This is a poll tax, and the cost on living is being put up by this. We don't like this this regulation. Well, if we had a better sort of financial model for doing these things, and people saw the value in water investment and so forth, these things would be a whole lot easier. So I think that it's slightly a matter of the financial sector sort of getting engaged with these challenges and seeing the opportunities in them, and then sort of actually taking them on sort of separately, but using the sort of uniting factor, which is really this climate change thing, to create the impetus to address all the other things.
Just for time management, because unfortunately we're running out of time and there are still dozens of questions, I'll take a last question and then I propose you to switch to our conclusion for today. The last question I'll take is, I guess, someone for all of you. What kind of emerging talent do we need more of as we invest in water scarcity? Sorry. What kind of emerging talent do we need more as we invest in water security? What kind of transition will we need to see in the workforce? Totally butchered that one, sorry.
I've got my mic on, so I'll say something. I think it's already happening. When I started out at Global Water Intelligence 22 years ago, whenever it was, people thought of water and they just thought of, dull, boring utilities, and that this was one of these sort of old men's jobs that was very stable and, was essentially doing the same thing that your forefathers might have done and so forth. But it's become a much more exciting place to be, and it's definitely attracting a different kind of person. And we advertised recently for a couple of jobs, and we ended up with 650 applications. I mean, it is certainly changing. And instead of being the last thing that the most dull people might want to do, it's become the first thing that a lot of exciting people want to do. I don't know, does anyone else have something to say on that?
Yeah, I would echo what Christopher was saying, but I would just add to it that I think we need talent from all corners of the planet and from all functional and sets of expertise. It's no longer just an engineering challenge, right? This is a financial challenge. This is obviously there is a technical challenge. There's a people challenge. There's a management challenge. There's a governance challenge. So I would say we need talent from across the board. The exciting thing is, and again, I think it's been driven by these unprecedented sort of impact and changes happening around us, that it is attracting that talent. And hopefully this paper and this webinar and then the GW event coming up is kind of the start of gathering that talent together, because I think that's the next big thing. We have to bring those ideas outside of the industry into the industry. And I think that's hopefully one of the goals that we're setting up to do here.
I think that's a perfect lead to the conclusion, which is sorry for all the questions we couldn't take today, but I'm sure we can take those questions one-to-one if you come and attend the upcoming Global Water Summit, because you will have the ability to see some of the speakers of today in the flesh. So you have a good chance to grab them and raise your question and discuss. What would be your call to action for each of you before we close?
I'll say if you work for a company or any sort of financial institution, make sure that they are disclosing their water footprint, because it's absolutely essential that we really start to see that that reconciling of where a company is at now and where the financial investors are and institutions are now, so they can start to take action immediately. I think what Dave's saying there about the importance of board level understanding of risk, I think this is one way that we really sort of get this to float to the top, because it's absolutely essential that we've got that buy-in coming from that level, and that's where we can then rebase and move forward.
Paul, Dave, Christopher, who wants to take the next one? That's a great one, Kerry.
Paul here, very quickly. I would say, we've two representatives of the buy side on this call. I would issue a call to action to the sell side. To me, the sell side of the finance industry should be helping securitize and shrink wrap and package the securities we need to move this forward.
Yeah, I would just echo what I just said earlier. Engagement. We need, and I'd say engagement from outside the water industry. How do we get the non-water community engaged in this water challenge? Because I think that's going to be critical to our success going forward.
Yeah, I guess you two just stole my thunder, but that was absolutely the number one word I have: engagement. And in particular, I mean, part of the main reason why we produced this white paper was to engage the financial community in this as being something which is unavoidable. It's something that if you either you get engaged or it hits you, and it's a lot more lucrative and exciting to get engaged. And if you want to come along and learn, come to the Global Water Summit on the 15th, 16th, and 17th of April.
Well, thanks a lot to all of you for all the insights you shared today. It was really packed, and yeah, I'm sorry you gave a French guy the duty to moderate, and we go overboard. That was to be expected. Just for everyone who wouldn't have read the white paper yet, I think there is reading level for even the people who have no clue about water up to the more advanced ones. So it's really a good read. It will come to the only expense of your email address. And so far, I haven't received too much spams from neither GWI nor XPV, so I would trust them with my email address. Thanks a lot for attending. I see you're still an amazing number right now. Thanks for all the questions. I renew my call. If you like to take the questions one-to-one, take them even by direct message. I'd be happy to forward them if that makes sense. Thanks to all of you. Thanks for everyone attending, and we'll see you in London pretty soon.
Thank you.
Thanks so much.
Great.
Thanks very much.
Thanks, guys.